Friday. It is the end of the week. It is the 31st of July. It's also, therefore, the end of the month. And what a week we've had. It really all kicked off following the press conference from Kevin Walsh on Wednesday night, didn't it? Before that, Monday, Tuesday, we had that big down move in oil markets, the 14-day strikes by the US on Iran had stopped over the weekend, suddenly stopped over the weekend. Oil gapped lower to open Monday. Things were quite positive Monday. Tuesday, we went even lower. So we went like 8%, 5% Monday, Tuesday in the oil market. Then there was the announcement that there'd been an encroachment in Egyptian waters. So the Iranians presumably attacking drones, attacking LNG tankers in Egyptian waters. So again, it's the geographical widening of this conflict. The Iranians have been very good at this over the last 5 months. We're now obviously into the 6th month of this conflict, and President Trump seems as boxed in as ever, threatening massive attacks and then not actually following through on those massive attacks, worrying about perhaps political fallout back in the US. But in the meantime, we're not moving forward. His popularity is slipping continually, and we're another month close to those key midterm elections where he could lose both the House and the Senate. I mean, it's unlikely, but anything's possible in politics, isn't it? The economy could turn around very quickly in the US. It's held up rather robustly so far, so we'll see how it pans out. But Walsh really disappointed markets on Wednesday night. Not really. I'm talking the talk with regard to inflation and saying it's our number one target and we're going to recalibrate it. And I've got some of the best minds to help me do this. I've got my work groups up and running, my task forces up and running. But comments I've seen, written reports, verbal reports. Some of the journalists in the room that night felt a bit sort of talked down to with regard to politics and with regard to the inflation outlook and the mechanics of how economics works. But I read an article. I think it was in. I think it was on. What was it? It's not in the Wall Street Journal. It was Market Watch, and there was, their take was really looking back at Alan Greenspan, and he used lots of technical jargon. I mean, it's a generation ago, 1990s, but he sort of baffled the market with lots of jargon at the time, and was very unclear about what was happening next. And forward guidance came out of that era. Walsh is very much anti-forward guidance and letting the markets dictate. And so the tightening of the yield curve, which has been the real story of the week, we had to sum up the week. It would be the story of the US yield curve, the short end, which is the 2-year yield, which is always very susceptible to inflation expectations, sort of anchored and not moving. But the long end, the 10-year, the benchmark 10-year, over 5%. Sorry, over 4.5%, 4.7% at one point yesterday. I think it's come down a bit since then. And the key 30-year, the long term, the long end of the yield curve over back to 2007 levels, pre-financial crash, 19-year highs for the yield. So if you're getting, a real good rate on an investment in the US government, well, why risk it in the markets? Why risk it on the Forex market? Why risk it in something as flaky as some people say as cryptocurrency? So all of that is seeping sentiment away from the markets on one hand, and yet we had we've now had we've had 6 of the mega 7 tech stock companies all reporting. Big question marks over Google, Alphabet, and particularly this week Meta. But the other, Amazon, Microsoft absolutely smashed it out of the park. Apple, disappointed. They missed on their services numbers, Apple, late last night. Also, iPad sales, but iPad sales not key. But iPhone sales holding up. Greater China numbers were a bit weaker than expected. Outlook was a bit weaker. So Apple also got marked down, I think 5.5% in the end after hours last night. I didn't see, but their revenue was better than expected. Their earnings per share was over $2. It was coming in at expected 189. and revenue was $109 compared to $108 billion, $109 billion. So that set the tone really for the markets. The stock markets continue to move down. We had a massive bounce back yesterday. I'm saying that, but not as massive as a sell-off. So the Dow, for instance, sold off 2.19% on Wednesday. On Thursday, it bounced back 1.9%. The Nasdaq bounced back 2.78% yesterday, having fallen 1.74% on Thursday. So overall, we're still down for the week, I think. We'll have to check where we are. I think we're up again this morning. But that's really been the story. Then we had the Bank of England following in the footsteps, really, of the there we go, of the let me make myself a bit smaller, of the Fed. Also dissenters was expected to, but who was it? The joint hall. It was Megan Green was already. I've forgotten their names now. It was two ladies, wasn't it? It was Green. Where's the Bank of England gone? Pill, Green, and it was Catherine Mann. Catherine Mann decided to vote for an increase as well. So 3 wanted an increase of 25 basis points. The consensus rate stay put. Same with the Fed funds. It was 3 dissenters. It's not actually on here, is it? The funding, the voting, but 3 out of 12. Here it was 3 out of 9, a bigger, 33% rather than 25%, but still dissent within the Bank of England, dissent within the Fed this week. Rates have remained the same, both at 3.75%. Expectations is that they will both look to hike rates potentially in the September meeting. So August, as we move into, the key event will be that Jackson Hole meeting at the end of August. So quiet couple of weeks coming up. And then it all starts to ramp up for Jackson Hole. Then we get Labor Day as we move into September, at the beginning of the month in the United States. And then everything kicks off. Volumes come back. Everyone's back at their desks. The new season starts as September kicks off, and we're looking towards the end of the year and our bonuses and all the rest of it for the year for everyone. And things start getting serious again as volumes kick up. But it's been a very, very key week. GDP was weaker than expected yesterday as well out of the US. Prices up higher. Advanced look at the price index here, 6.2% from 3.6% last time. So more stories of the stickiness of inflation. The key core PCE came in line with expectations at 3.3%, down from 3.4% on an annualized basis. And it was weaker on a monthly basis here, 0.1 of 1% compared to 0.3 of 1% last time. Stability in the jobs market continues to be the mantra through the weekly claims, at least. And so that is why we're all focused on inflation, which is then triggered through to the credit market and the bond market, and it's all been hitting the dollar as well. And finally, final big central bank this week, overnight my time, the Bank of Japan maintained rates as they are at less than 1%, but there was lots of chatter about inflation getting to their 2% target. Remember, there's been no inflation for 30, 40 years in Japan. And it's been a big issue over the years to try and get the Japanese economy stimulated moving forward. And it just hasn't happened. New prime ministers come in with a slash everything, slash costs, slash government costs, but we're still not moving forward. We are starting to see a rise in inflation, though, as the governor said. Udia had his press conference earlier this morning, later after the announcement. And then we've had that intervention from the Bank of Japan last night when we were at $164 yen. Sorry, let's take me back to the charts. 164. We were. Where's dollar yen gone? Here, 15. Oh, so we're under 160. So it's moved down again. So yesterday, sorry, I'll just show you the hourly chart. We had the significant intervention clearly there on the US. So it seemed to be coordinated from some of the gossip that's going on. The Koreans were involved. The US looked like they were involved, but we went under 160 from 164 earlier in the week. And we went as low as 158 at one point, 158 an hour after the US Open. We've come back to 160. but we're now back down to 158 or 159. So perhaps whether that's unlikely to be an intervention from the Bank of Japan, or maybe as they've wrapped up the weekend. That was a 9 o'clock candle, but yeah, I mean, even so, we've still got a very, very weak yen in historical terms, and as we can see, big down day yesterday. But if we look at the weekly chart, we'll come to the weekly and the month ahead for everything in a minute. But you can see quite a significant down week compared to these massive movements. So we're back under 160, but in historical terms, I don't know how far back this chart goes, but in historical terms, 160 is still a very elevated dollar yen price, and very, very much a weak yen is the story. But you can see finally quite a significant down month for July, having this massive ramp up for all of 2026. But anyway, we'll come back to the charts in a minute. Let's wrap up the week because it's a very significant week we're just having. So final significant, not big, but significant data point today has been the consumer sentiment numbers from the University of Michigan, and they've come in weaker than expected. 55.2 from 54.2, and 54 was expected. Inflation is still an issue. It hasn't come down. There's still people, the 400 odd people that get interviewed, still looking over twice the rate that the Fed would like to see inflation. So 4.2% for inflation expectations, 55.2 for consumer sentiment. Remember, we had the core right at the beginning of the week. We had the consumer sentiment down as well, missing expectations. The Consumer Board consumer sentiment 90.8 from 92.2 last time. So that's relatively robust. And it's a bigger cohort for the survey. The University of Michigan, I think it's only about 400. Is it 400 people? I don't remember that. 800. All right, so it's bigger than 800 consumers. So it's quite a big survey, and they do it every month. So 55.2. Sorry, it's better than expected. I'm saying it's worse than expected. It's better than expected. Unless that changed since I looked at it, I don't know. But 55.2. So that's interesting. That's quite a tick up actually. So just forgive what I just said. That's interesting. We bounced back. Whether that's because we'd seen this was taken, it probably was, wasn't it? It was taken after the oil price came down last week. Let me just see when they were doing this. Yeah, so it's been a revision. Two versions of it released about 2 weeks apart. So it's it's still the oil price was still going up when that was saying. So 55.2 as it bounced up a bit, and that's quite a significant turnaround actually back to high levels. So see if we slip again if this the hike in oil prices hold. So 55.2 better than expected for the final key data point of the week and of the month. So what a month it has been, my friends. Let's just have a quick run through and a review of where we are with everything. Let's just start at the top of the shop, which is where my chart was with Bitcoin. So Bitcoin continues to plow the trough betwixt 65,000 and 62,000, and we've been there most of the month. So here, 3rd of July, or the beginning of Thursday, that's the Wednesday, the 1st of July, first day of the month, we were all the way down here at 58,000. Let's go back to the beginning of the month here. That's obviously. So we'd been moving down, retraced, moved lower again, and that was the ultimate floor for the summer at the moment, 58,000 for Bitcoin as we started the month. That's the 1st of July. We moved and pushed under 58,000 during the day, and then we closed the day at back over at 60,000. So 60,000 was recouped. There's the 60,000 level. There's our 62. There's 60,000, which was held, but we moved down to start off the month. Lots of talk of strategy cashing in their Bitcoins. Said they'd never sell. They've sold. And since then, we started to anchor up. So we had basically our monthly trend line was doing okay right up until last Friday, where we broke back down through it and we've been sideways this week and then buyers to the downside. So we've rallied through our 20-day moving average by mid-month, peaked at on the 21st here at 67,000. Looked like here on that Monday, Tuesday following the weekend, looked like we were moving higher. Trend line was all nice and fit, and yet within 2 or 3 days we had 3 consecutive days to the downside, and it meant a key breach of the key a breach of the key technical 21 EMA, rejection of the 65,000. Another rounding top here in mid-July, like we'd seen before, as we'd gone over the 20-day here, stopped at the 20-day here, stopped at the 20-day here, stopped here at the 200 moving average back in May. Resistance. This is when we were over 80,000. So that's the leg down. So that leg down is completed. We've rallied up, and it's probably fair to say that that leg, although it's a weak one, is probably over. Although markets are moving around quite quickly, but as you can see today, the rejection of 65,000 is in place. So there's not a lot to add to that, really. 62. 65 is our channel on a daily basis for August to watch. See if we breach that. The big floor, the summer floor of 58,000. Are we going to get tested? Is it going to break to the downside during August? Quite possibly. We'll see. August can be quite a good. Ironically, August can be quite a good month for crypto historically. But obviously, a break of the summer high would need to take us over 67,000 here from the 21st of July and here the middle of June. When we were at that level as well. Earlier in the summer, we were at that 75,000 level. So key channel to break. That's the 50-day moving average. There's the 20-day moving average. The 200-day moving average is up there. So we're aligned to the downside. A breach of 62 could quite quickly take us to 58 in the coming weeks as we start the new month. There's already been a cross there on the daily, on the MACD. The volatility is dying. That's, as you can see, the ATR moving down, and the RSI also trending lower and dipped lower. It was quite a significant sell-off today, but that's, don't get too excited. Well, depends on how you're trading this on an intraday basis. It's the end of the month wrap-up as well, guys. So watch that as well. So crypto, as represented by Bitcoin, remains weak and bearish going into August. Oil prices remain obviously the dominant indicator of what's going on in the war. Brent went back to $90 this week on Wednesday in particular, having had a big old gap on open on Monday, say 5% decline Monday, Tuesday, into the 200-day moving average. If technicals are anything are still relevant, which you can see clearly they're still in play here. Here's we support there for 4 days before we broke up. So that's still key, but these are out of alignment. We've got the 50, the 20, and the 200, so they're not in alignment as far as direction is concerned. So horizontal levels to watch is obviously that key $90 level, and support, you'd argue, could be back down there at 84, where the 200-day moving average is on Brent. So obviously it's very much dependent on the news flow out of Washington and Tehran and Israel and Jerusalem to an extent as well on the oil flow. And obviously, the Houthis are now involved. That brings in Saudi Arabia, more significantly. Iraqi militia are involved. As chatter of Chinese shoulder-launched missile launch has been sent to Iran or bought by Iran. Obviously, the dirty oil getting out somewhere to market, whether it's Russian, whether it's Iranian, getting to market. India, China still buying that oil, still funding it. That then obviously the other wars, the Ukrainian war, still grinding on. Attacks on Kiev again overnight, and some key cities. We had that missile falling in Poland from the Russians as well yesterday. So that's background noise, but obviously has a major impact on the oil market, not as much as the Iranian US-Israeli conflict. So Brent, going forward into next week and going forward for the rest of the final month of the summer, 84 is our key support, 90 is resistance, and the high we saw in July took us to 97, and obviously above that is the hugely psychological $100, which we haven't actually traded over since the end of May. So there's one little positive caveat. But $90 becoming a key pivot area with this 84, 85 zone on our 200-day moving average. And pre-war levels, 73. 20 it was, wasn't it? 73.40, I think it's something like that. Like, yeah, 73.25, the 27th of February. Now, as I say, 5 completed months away. And it's going to be 4 to 5 weeks, wasn't it? Old Hegseth and Trump said when they started. The Iranians proving much, much more sanguine and sophisticated opponents than Trump and his cronies expected. Very much in place and not going anywhere. The crackdown for those supporting the West will be quite significant if it isn't already. So, energies still volatile. It's directionless in a sense, but again, channel bound. 84 the support, 90 the resistance for Brent. Crypto we did, energies we've done. Forex, the dollar remains dominant, although it's obviously weakened significantly this week. Let's just go through all the majors on a daily basis. So euro back over 114 and motoring high. We went to 115 at one point, I think this morning. Or was it yesterday? I can't remember now. Sorry, that is the daily time frame. So yeah, it was a significant. Was it? Yeah, it was 115. I should put that on here because I've got no lines. Let me just put that in. Sorry, just bear with me a second. Horizontal line at 115. Make it 2. Make sure it's in the right place. Coordinates 115. It had been 114, hadn't it? There we are, 115. So shall I make that just 1? Right in there. So 115 is what we've 115. Sorry, is what we've recovered. Can't just want the line. Okay, so it's not too big. There we are. There's that 115, 113.25 we were down to at the end of June. So really, sorry, let's just bring in this line again. So as far as July is concerned, we started around here, didn't we? There we are. We've been sort of sideways. We've been sort of channel bound under the 20-day moving average at the low end. So dollar's been on the front foot until Wednesday, and well, really, it was during Warsh's press conference that the dollar weakened significantly, weakened again yesterday. It's come back a bit today. So as we move forward into August, the dollar still remains with the upper hand, I would argue. Still, it hasn't broken that enough to move higher, but we are over the 20-day. That's enough. I said that we my end of day system did go long on Wednesday. I think I might be stopped out on that today as well. But anyway, that's something for another day. My end of day, we're not talking about that hour. We're just talking about the short-term stuff. So going into the end of July, we have a nice little, you could put a little trend line on the bottom of that, those wicks there from Tuesday and Wednesday to the upside. So going into the new week, going into the new month, 115 there's obviously all sorts of resistance lines here, but the 20 days more or less flatlining through there at 114.30, the 50-day at 114.75. There's the big round 115, and then there's the 115.50 to the upside where the 200-day moving average is sitting. Obviously, there's not going to be any interest rate changes during August for anybody. But obviously, what the market will be interested in, these dissidents within the Bank of England, and particularly within the Fed, Kashkari, who's not shy of saying his piece, Logan, and who's the other, Beth Hammock, what they've got to say on their microphone when they get asked questions or when they have some official speeches. And obviously, there'll be some comments before the Jackson Hole meetings towards the end of August. So euro bid against the dollar as we come into the end of the month, but don't be surprised if this can turn around quite quickly as well and back down there. So key support or key low for July was that 113.25 level, which we saw sorry, for the summer at the end of June. Their July's lows have been a little bit above that, not much, but 113.75. So that's been the July floor, and there's the upside targets we talked about before. So euro bid for now for the last few days. See if there's any consequence from that, how much of this bid, this run, gets held. So again, if going to next week, the impact of the wash impact, if you like, is that on the dollar here, euro dollar, and obviously the don't discount both sides of the argument. Don't count anything Mr. Lagarde's had to say. But that's the leg. It's only a 3-day leg, but take that with the caveats that comes with that. But we've moved higher. We've retraced, and we found support today around about the 38 and the 9-period moving average. Big support. 50% of that rally at 114.50 basically. So again, the round numbers in the 20-day. So that's that zone there of support, 114.50, the 20-day, and then to move lower. We need to break the July low, which is that 1370 area, and then down to the 1325 through 1350 as well. So some clear levels going in next week for the euro. Yen obviously has a different profile simply because of the intervention from the central banks. But if we take out yesterday's, which we can't obviously, take out yesterday's intervention, we were talking about this top, weren't we? This 162.50 top we'd had for 4 weeks, and we burst out of it for a week or so, and then we had the intervention yesterday ahead of the Bank of Japan's announcement. So we're now back under 160. So again, a bit like we saw with the intervention back at the end of April. It's no coincidence these are happening at the end of the month, guys. End of April took us into the 200-day moving average again. As we remember what we said at the time, there's the intervention, and a few days later we took us down through and this was 160, 156 and 155 are the levels that we were talking about back then. That's all been ripped up, teared up. All of that money has gone somewhere. Lots of profit getting gobbled up in the banks. We've seen that in their earnings, and the weakness of the yen has continued to track higher. We broke out of that range there that we held for most of July. Last week it wasn't it? We burst higher, 164. I don't know, that's 164 or whatever, but there's 164. That's where our high was. 1, 2, 3, 4 days, and then the intervention came yesterday, and down we are. So we've done the same thing. Look at this. Don't tell me markets don't repeat themselves. And as I say, anything to do with Japanese trading, my friends, it's very technical. So always take that into account. So again, obviously the Bank of Japan were trying to get it to its 200-day moving average. It sold until we got to the 200-day at 157.85 yesterday, and then we popped up. It wasn't for very long, but we did do it technically. Again, algos trading, retail traders trading, knowing what the central bank might be doing. So now, as we go into the new month, we wrap up July. Obviously, 160, a breach of that will very quickly, I would argue, could very quickly move back through to 164, the previous high, and on to 165 if this gets gobbled back. I mean, it took a while last time, but we did get there. It took, that was the beginning of May, and it took us to the beginning of June before that was taken out. So it took the whole month. It may be a bit quicker this time. In fact, it's August, it may take even longer. But anyway, we'll see what happens. This could be it. It may not be it. We can't. The Bank of Japan, the Japanese government can't have the yen at 40-year lows for an extended period of time. So they are talking about, inflation coming back. So this, again, very organized, predestined way they're wanting to put their rates up. They might have to go with it. There was one dissenter that was wanting to move rates within the Bank of Japan panel this morning. So that might start to rise as well. So we've had 3 in the US, 3 in the UK, 1 in Japan for higher rates. So that mood noise is continuing, and inflation is getting back to that 2%, up to 2% in Japan. So going in, as I say, to next month and next week, 160 is obviously very, very key. And then I'd argue 162, and then this top floor here, that's a key resistance at 162.50 from this month, from July. There we go. See, that's the 1st of July there. So we went, oh, outside. So that's a big old resistance. So basically, it's where the 20-day moving average is. So these key levels come into play. So that's a key level, 62.50 from July for August going forward. Obviously overstretched up here. But here, and you see here, huge move on the RSA to the downside. So dollar, again, still on the front foot. Dollar CAD, let's just do these in order. Now, actually do them in order. So the Swissy topped this month at 82. So 82 has been taken out. Again, I'm going to put that in because the dollar's it's weakened significantly. Horizontal line at 82. Sure, that's in the right place. Coordinates 82. And if we scroll this in, you can see 82's level. The dollar hasn't been for a while against the Swiss franc. Go up to the week, check it up to the weekly charts. You see, this week we went to 82. We haven't been back there since June 25. So well over a year ago. So 13-month highs. Dollar Swiss, and you can see that's still in place. You see the weekly trend, very much still in place. The 50, the 20, the 50, all in line there to the upside. So dollar still on the front foot despite a weak week this week. So if we go back to the daily going into next week and next month, there's the top at 82. We've moved down on yesterday. There's the 50 as our support. So a breach under this area here of 80.40 is key going into next week, and then 80 itself where the 200 day is. But again, a bit like the others, a lot of fresh air under here if this 200 breaks, but that's quite a significant support level. But we didn't respect the 20-day moving average yesterday. We bounced to the 50, and now we've bounced back to the 20. So again, dollar remains. I still bid on that because that's just a blip potentially down and then back up. But we shall see as we move into August. As we're across there on the MACD, it's lagging, but we could easily turn up. That's quite high. And interestingly, the RSI is still back over 50 and rising again. So that's your support for next week, 80.45. 80 itself and the 200-day too. So that's your 40 pip support zone on euro, on the Swiss franc, and you see that goes back to there, the beginning of the month. That's a resistance to the upside at 80 towards the middle of June, and all the way back there to the beginning of April as well, as we were just going to. And this is fairly typical Swiss franc dollar regime, to be honest. So the key levels for the Swiss franc. Canadian dollar 140 has proved a big support zone. We bounced off it last week, rallied, but we couldn't hold the rally for the dollar against the loonie. Loonie came back at the beginning of this week, and then the dollar's bounced back this week as we've been back into 140. So we could easily have another leap up and a move down to 140. So break of 140 will quite quickly take us down to the 200-day at under 139 if that breaks next week or this next month, because that's the 50-day we're now meandering through. We've got the 20, the 50 and the 200. So it's still bid to the upside as far as the dollar's positively concerned. But for the next couple of weeks, we need to break 141.25 if the dollar's going to move higher again and test 142 again against the loonie. So that's your area to watch next week to the upside for you dollar bulls against the Canadian level. Just put that as a dashed line. Okay. One. So that's our high for this week. And as far as let's move this, as far as the month is concerned, we were moving lovely, really nicely, really strong trend through during May and June to the upside. We got to the end of June and we topped out here, as we've said earlier in the month, 142.50. Consolidated, then moved down, and we had that big break there mid-month, and then we've sort of retraced, but not as high, so it's weaker again. The high is lower than that high, so we're down again, and the lows have provided new lows, but we haven't gone below 140. So breach of 140 is what's really required. I'm going to change that to a purple. That's what it should be. And I'm going to mark that as 140 as well. 140 text. 1.40, and it needs to be orange, doesn't it? That's the rules. There we are. Okay. Coordinates, style, and it needs to be, it's in the wrong place, isn't it? Text over to the right so we can see it on the 140 to the downside. So remains key support area 140 for the Swiss franc. I don't know what that red line is. I'm going to get rid of that. I don't know what that green line is either. I'm going to get rid of that for now. Anyway, so there we are. Current trade at 140.50. Still shy of the 20-day moving average. So break over this area to take us higher. 140 being support next week, so we could be testing that, and I say quite a quick move down, and then that. Oh yeah, I remember that 139.40 area as well. Let's make that a dashed line actually, not to be played with as well. 139.40 key pivot swing area potentially for so it takes from there to there for the loonie. If we break 140, 139.40 as well, and that's halfway to the 200-day at 138.9. So dollar overall still remains on the front foot. Euro we've done. Aussie finally breaching 70 today after yesterday's big strong positive candle, but can we hold it? Really, that's the story. You can see that very, very clearly where the Aussie situation is. The 200-day 69.20, the 20 at 69.80, the key dot 70, and interestingly, we've pushed even higher, 70.40 today, and the other cluster is 70.70 really from this move into 70 and then bounce at the middle of June. That is so again for as far as July is concerned, the Aussie dollar has been going sideways. Back here, wasn't it? Yeah, there we are. That's the end of. That's the end of. Should be oranges on. That's the end of June. As of July, so the Aussie's been back. Took all the month. Well, took 2 weeks to get to .70, and then it spent the next 2 weeks trying to not break it and just go sideways again. Up day yesterday after following the Walsh's comments, but can we hold it? So here the Aussie remains really on the upside here, but let me just move that July trend. Is it's finished there now, so that's our daily trend line. So it's been lowered. The angle's been lowered. See, it's a weaker connection. Now if we put that up to the body, there we are. It's moved the body of the can. Oops, the body of the. Let me show that. The body of the. Let me do that. Is it? The body of the. There. So that's our trend line. Aussie somewhat on the front foot against the dollar, but again, I wouldn't get too carried away. We need to break away from this .70. We're going to go higher. That's where the 50 is. That's where the 20 is at 69.80, and the 200 69.20 or 69.15 to the downside. So we're out of the channel at the moment, thanks to yesterday's big engulfing candle post RBA and Fed this month, and then we go into August. So can we hold 70 is really the story of next week and the rest of the month as far as the Aussie is concerned. The RSI but back again over 50, tracking higher. The MACD signal line also tracking higher. Small histograms, but we are still positive. So it's just hang on to your trade basically. But the volatility could have easily taken you out this week, as we went all the way down to 69.20 as well. So, but still bid, thanks to yesterday. But see what the follow through is of that big move to the upside. As you can see, it normally gets followed through big moves, down again, upish. But we're at 70, up. So we're over 70, come back to test it. So we could easily move back up here and the upside test would be 70.75 from this cluster here from mid-June. If we can hold the 50-day for the Aussie. Sterling, 134.25. We've been into the key support 132 area. This is our earlier in the month trend line. The actual technical beginning of July was there. We were already up and running. Obviously, we've had the political situation in the UK change. They've got the new Prime Minister. He started with lots of very user-friendly, voter-friendly comments and communications and token. Not many criticisms, obviously, many token gestures. But again, it is the summertime, so the rally to 135 couldn't be held. But we've bounced back very, very significantly as well. Sterling, one of the better performing against the dollar here. So this is Wednesday's rally and big follow through again yesterday. Shy of 135 for the second rally, so the high is lower than the previous high. So really, as you can see very, very clearly there, we've got this big congestion of moving average, the 200, the 50 and the 20 all flatlining at 133.75. So that's our massive, massive pivot area as we go forward now. Both the new Prime Minister has had his feet under the cabinet table for a while now. And August could be quite, although normally holiday period could be quite pivotal for the sterling. So that's the big pivot area. I'll just put that on as we go into. Now you don't need to, but that you can see there's a huge 133.75. Make it a nice bright color. What color should we make it? Let's make it yellow for a change. Not normally do yellow. You can't really see that, can you? Can't. No. What's your make it yellow? Make it bright blue. Let's make it turquoise. There we go. I'll make it. It's a big old pivot area. I should make it 3. Yeah, that's our pivot area, which has been the case for the month, basically. And you see, there's the beginning of the month here. So that's been our pivot area. So that's still critical as we go into August. 133. I'll just make that 70, make it 5 because I like 5. You know that 133.75, I should say. So under 134. That's a key pivot area. Our low of July was, the opening gambit here at 32.50. So we can't ignore the summer low at 31.50 as far as sterling's concerned. So that's our summer low. So we go into August. There's our key pivot area, and 135 remains absolutely key as well as 132. I was putting 132 horizontal line at 132. Make it a full line. Make it purple. Make it 132. Close but not close enough. 132. Text will make it 132. On the right hand side, please. Sorry. Okay. This for my benefit going into next month, guys. Sorry about that. There we are. 135 is the upper side. 132 is the big support, and our pivot is 130. Actually, I'm making out on that. So it's our pivot, July pivot, and also all those moving averages you could see. 133.75 for cable going into next month. So where are we? We're above that yesterday and today so far. But, just take it both ways. Don't get too entitled about it. Our trend line has been disregarded. I'm going to take that off. Really, the only trend line is a weak one because we've only got 2 touches on it. From the low here at the beginning of the month and that low we got to yesterday. Sorry, on Wednesday, head of the Bank of England, head of the Fed, when we went into whatever that is, basically. Now I'll extend that. So where's that low? That's 132.85, and that's probably for next week. That's our trend line for July, but it's a weak one. As you can see, it's only got 2 connections and there's a lots of variance to the upside. If you had one here, it'd be broken. So 135 key, 133.75 daily trend line, tracking to 33.75 by mid August. We'll see where we go. RSI still positive. It's dipped today, and we just got a weak cross on the MACD. Interestingly, to the upside. So let's see if we can hold these 2 days of gains. That's the key leg up. And again, fib level looks like that leg's done, isn't it? As far as sterling is concerned. So where's our next port of call? Well, we've already gone through 61.8 and already gone back to test 50. So, there's the 38 sat smack bang on our pivot area. So this, it's another reason that line is there. And there you go. Fibonacci, as if by magic, coming out with a line again. 38, a key fib level, 38.2, is where the 50, the 20, the 200, and the 20 moving average all coalesce, which is very, very unusual in itself. But I'm going to take that off because it's massive key area. 33.75 technically there for cable. And finally, Kiwi, as how long have I been blethering on for ages, haven't I? Today, but it is a big roundup. Not quite an hour, it's 38. So Kiwi 58.62. The trend, the strength of the Kiwi, the weakness of the Kiwi, the strength of the dollar. Again, horizontal levels 57.80 at the 50. The 20 is below that. The 20 is crossing the 50. This is looking relatively positive, although we still got the 200 there. So we're still aligned to the downside at the moment, unless yesterday's rally can hold. So Kiwi, major support for the month. Again, it was a trending higher. What's the Thursday? It was a trending higher month for the Kiwi against the dollar. Looked like it got even steeper, didn't it, earlier? And then it turned around. Then we were down. Dollar strength. Okay, dollar strength, and then that's been tweaked as well. So again, our pivot area 57.90, call it dot 58 really on that one. We'll put that horizontal line there as 58. 0.58 for Kiwi. That is the support pivot area, if you like, that we breached yesterday. We couldn't breach early in the week, but we broke that down trend line. That's up. We're through the 50-20. They're out of alignment because we're supposed to be down. Now we need to cross, but it looks like we're crossing the 20, crossing the 50. Through the 58 will be positive. Where do we go now? Well, there's again another one that's a lot of fresh air, but we are now in a congestion zone where we were here through April and May. This where we right are now, 58, 59. Let me put 59 on as well. It's a bit higher than that, interesting. So we obviously couldn't get and hold 59. 59 for the Kiwi. Okay, so that's a step too high. You see it was a up and down. Resistance was up, down we went into 56 zone. Let's change that to purple. Change text to 0.56. There we are, because I'm going to be using these charts now rather than the. So just bear with me. To the right, please, so I can see it. Okay, so that's 56. This is the zone we went in. We didn't actually get that far. It's 56.50, wasn't it? But there's that downtrend line broke. But it's a massive update yesterday, massive weakness on the dollar following the Walsh press conference. So can we hold it to the upside now? 59, very, very significant line in the sand. And where we are now, in fact, 58.70 is also a key resistance if you look sideways. So that might easily give that back up and back under the 200-day at 58.30 now. So that's key next week. 58.30, 59 is the top and 58 at the bottom where the 20-day is. For the for the Kiwi dollar. Indices, what a week, what a month we had, my friends. Let me just do more than just the dollar indices. But again, let's just do these in order. NASDAQ has been the lead, if you like, and also the lead as we bounced back yesterday. So although we bounced back significantly yesterday, new summer low from Wednesday wasn't tested yesterday. We rallied, as I say, significantly back over the 9, over the 5, and into the 9 period moving average. We're still shy of the 20, still shy of the 50. The 20 has crossed the 50-day moving average, so that's reversal is still in place. This big, remember the big up leg we had from the lows down here at the end of beginning of April, May. And June to the upside. Then we went sideways, and then we've rolled over. So all these lines here with this breaking of the 20 days, we've consolidated, then broke down. And then, here, the 16th, see that there, 16th of July, when we finally breached the 50-day moving average. That was key. It wasn't a massive break on that day, but the following day was a major move lower. So that looked like this is a move lower that might have some legs in it, because we then hit the low of the summer, the June the 5th, June the 22nd, and then that 17th of July retraced for 2 days and then broke even lower, and we've consecutively moved lower this week until we had a big buyback and a big chip stocks were cheap enough as the mantra yesterday. We had the tech companies out of the way, so I'm just going to review the 6 that have come to market. So a couple of weeks ago, Google disappointed somewhat. Tesla disappointed somewhat. We had those massive sell-offs last week from Tesla and Google last week. This week we've had 4 of the remaining 7 reporting. So 2 outstanding. As far as the markets are concerned, Microsoft up 15.5% yesterday. Amazon up 9% after hours yesterday on their earnings. All the boxes very, very much tick for Amazon. If I just use the individual stocks, I'll just see where they are at the moment. Sorry, I'll just open another target. So the tech business is in. The worry about the capex may have been overdone, may have been, self-fulfilling chatter. There seems to be some delivery particularly with Amazon and with Microsoft. There are questions clearly around Meta Group, Facebook, Instagram, and all the other outfits. All their free cash flow disappeared. Meta, their earnings per share came in at 6.18 compared to 17.1. They missed earnings per share, $6.18 from 17.14 the market was expecting, and they got clobbered a good 9 and a bit percent after market, and they closed yesterday down 9%. They probably bounced a wee bit today. So Meta getting big questions. Microsoft last night delivered, particularly on their Azure cloud reporting, 43% increase, 31% year-on-year revenue increase. CapEx 70% year-on-year increase. Some eye-watering numbers that's involved, but really look like they're actually starting to see some return on these massive investments. So monetizing their AI is a note I've written here around Microsoft. So Microsoft was up significantly. Meta was down significantly. Apple yesterday, the services number, I remember talking about the Apple services when they first launched it, probably best part of, it probably is the best part of 10 years ago, but certainly missed. Their iPad missed. iPhone was okay and in line, with a bit better than expected. China sales were a miss, but overall, the bottom line and the top line, the EPS was better at $2.22 compared to $1.89, and their revenue topped as well, not massively, but 109.45 million compared to 108 billion, I should say, not million. So remember, they're up 20% this year, Apple, compared to its competitors, doing better, having been clobbered and lost their crown to Nvidia as the world's largest company. They've got that back now. NVIDIA report a week after next, I think it is. I think it's the 23rd of August. Next week it's SpaceX, isn't it? I think I made a note in my diary, didn't I? Perhaps I didn't. No. SpaceX the 4th or the 5th. I think it might be the 5th. They release that stock on the 6th of the next week. So it's going to be an interesting week for SpaceX next week. Perhaps I didn't. Anyway, so you'd want to be holding Microsoft and Amazon stock. Certainly not holding Meta stock this week, and Apple also down 5.5% yesterday as well. So Apple and Meta marked down. Microsoft and Amazon marked up. Amazon, I think, was probably the star performer of them all. I don't know what they're doing today, but let's have a quick look because it's the big movers. So Apple's up 9. Oh, Apple's down 9% now. Amazon up 15%. So it's doing a Microsoft. So yeah, Amazon up 15%. Oh, look at this. Roblox gaming media off 27%. Reddit off 21%. Some, if you're not in line, you're getting hammered. So 9.2%. Apple are down. Amazon's up 15%. So it's a bit like the night before where Microsoft rallied and Meta got hammered. Today, Meta's up 1.8%. Google's up close to 5%. NVIDIA up 1.6%. And Microsoft up 1% as well. So, a game of two halves, as they would say in footballification. 4 of the big 7 stocks going in opposite. The 2 going in opposite directions to the other 2. So big gainers, big losers. That's the beauty, some would say, of the capitalist system. Anyway, back to the technicals of the actual indexes. So the trend to the downside is still in place despite yesterday's big bid. For me, we need to be back over the 20-day moving average at 28,670. You could easily do that, of course. Big support, both the fib level of the leg up, which is the 50% fib level, sits at the 200. So this is big technical support, 26,800. We said this before. It would mean a new summer low for August, but that's not necessarily rolled out. A break back over the 20-day and the other key fib level here, the 23.6, less significant than this down one to the upside, which now sits at 28,700, 28,700. I'd like to see a break if the NASDAQ is going to move back to the upside. Let's do the US ones. We'll come back to Europeans in a minute. The world's most important stock market, S&P 500, gained 1.66% yesterday, 121 points. Why isn't the S&P coming on? Come along. The market's gone to sleep. Might have been blithering on for too long. I had a bit of a problem with, some people had a bit of a problem with trailer. It might be my internet. Doesn't look like it. But we've lost connection by the looks of things. I don't know. Can you still hear me? See me, my friends? I'm going to wrap this up. I've been here over an hour now, but it's a wrap of the week. Now we've lost that. We lost the Dow as well. Let's try and close that down. Try and restart things. Too much going on, possibly. Let's close that. Just bear with me a second. That's still open. Let's close that. Let's close that. That's still open now. Let's see if we can get our trade locker back. No, sorry, you lost it yesterday. There we are. Come on, Mr. Trade Locker. There we are. So that's where we left it, wasn't it? This is the NASDAQ. S&P 500, 7,445. Similar pattern, except we were breaching the day at the 20. We're much higher above the 200-day. Downtrend still in place. Big exaggerated move yesterday. On Wednesday. All bought back yesterday and more. So I say S&P was off 1.52% on Wednesday, and we bounced back yesterday 1.66%, 121 points back, having lost 112 points on Wednesday. So we're back to where we were basically on Tuesday, but we still remain capped You see here the 20-day. We still remain capped at the 20-day, flatlining the 50. So we got 50, 20, and the 200's down here somewhere. Where's the 200 on here? Where's the 200 gone? Oh, there it is, all the way down. I didn't think it was that far down, but there we go. So we're still bids to the upside, really, 250, 20. So the key for the S&P 500 is that 20-day, the 50-day going into next week. But obviously, we can't rule out 7,300 as we go forward into March. So 7,300. Is that 7.3 or 7.4? Yeah, 7,300. So instant buyback. Last time we did that, hit it, bought back, hit it, bought back. So clearly the 50-day is playing out. But look what happened. We've got a flattening of the 200. So it's flat. That down wedge is still in place. That up wedge has been breached to the downside. There we are. That's fairly steady. So we burst out to the downside. So pressure is still to the downside. The RSI, if you put a trend line on the RSI, it's still quite bogey. But again, this is not unusual for the summer months. There's June, July, August, all the way down. So the trend is down. We're back to 50. We could easily fall back down. We could move up there. The RSI would need to move over, 54, 55 to start looking positive. We've had the bulk on the major tech companies out. There's still lots of companies to report. Don't get me wrong, lots and lots of tech companies to report still, as well as pharmaceuticals next week as well. So still lots to come to bear, and obviously the that downtrend line is still relevant as well. So that's still, I'd still argue bearish the S&P, and the Dow less so, but it's been a bit surprisingly more volatile. So again, that downtrend has been breached on Wednesday following the Fed. So that's progress. My trend line gone. But if you want to be, that was a double top, wasn't it? On a double top, but that's our trend line now. That's not the daily high over here. So next week we'll do that. But again, a 50-day playing absolutely key. Buys at 50, buys at 50 again here on the Dow. We've got companies like Caterpillar. Caterpillar used to be the bellwether for the US stock markets. Caterpillar and GE. So they report next week as well. But the volatility, don't be, that Wednesday post-wash sell-off was really, really brutal. The Dow lost 1,150 points on Wednesday. Bounced back yesterday, 600 points, only half its gains of the losses it's sustained on Wednesday. So again, that's looking a bit weak. But again, flatlining 20 is not helping us. So we'd like to push under and like to go under the 50 before that started to trigger a big sell position. But the bias is still to the downside. You can see that on the RSI. And we've been like that all summer from the beginning of June, as with the others. And then, here again, technically, MACD also selling, also trending lower. So stocks are sending some signals that we've had enough of this rally. And once the second quarter, this could be the top of the move. Or not, obviously they're still, the key thing, the other key news from the four big tech reports today, they are still, going to be spending more. And, some of them, two of them are showing some monetization of that AI spend. So as a group, they're still huge, but there's been some different performance parameters. But as far as the index is concerned, the top at the beginning of the month hasn't been taken out. So all-time high, 53,300. We're not that shy of it. Ironically, are we at 52,300? We're only 300 points. 1,000 points short of that. And at 53,000, it's percentage-wise, it's very small, isn't it, relatively? But for the month, it's been a down to the downside. Elsewhere, the DAX in Europe continues to grind higher. We're just shy of all-time high. Oh, in fact, we put in all-time highs at the beginning of the month, and we've been moving higher this month as well. So that high of the day today might be is that a new all-time high on the DAX? I think it might be, mightn't it? That's interesting. Missed that. So the DAX not impacted by Walsh's comments. It's been moving higher all week, basically, hasn't it? Overall, so 25,000 has been held all week, and new all-time highs today. Very interesting on the DAX. So there we go. That's continue to loop higher to the upside. So if you look at the weekly on the DAX. No, I'd have to check it, back check, but I thought I would have seen a note, new intraday all-time highs on the DAX, but it looks like that might actually have been in, perhaps shy. I'd have to look. When was that? That was July. Go back to the daily. Looks like it may have just done that, doesn't it? That Monday, July. Perhaps it hasn't technically, which is why there's been no note about DAX. But anyway, we are going the opposite direction in Europe on the DAX higher, and the FTSE also moving higher this week. And again, what can I say? That's all-time highs for the FTSE. Somewhat missed out. So strong 3 weeks for the FTSE. Over 10,800, and that is definitely a new all-time high. 11,900. So let me just bear with me a second. I'm just going to put 11,000 on here. So that could be the news of August. 11k on the FTSE. My word. Let's have a look. 1, 2, 3, 4, 5. 1, 2, 3. Okay, there we are. So perhaps we've been there. Who knows? Wow. So strong month for the FTSE. And there we go, the weekly. And look at this, weekly crossing this week. That's a bid, isn't it? And now again on a weekly basis, what's that? That's intriguing me. I'm going to take that off. These moves, that's a leg, that's a leg. So just gonna, so that's a leg within a leg. Oh right, so there we go. So FTSE 11,065 extension. I'm supposed to be a bit late now from a weekly basis, but that was at 10,700. So that's done that quite quietly. So a good week in Europe. DAX, if not at all-time highs, very, very close. And it looks like the FTSE has poked a new all-time highs today. Again, I've been following the news today, but so there we go. It's not all going on just in the US. Nikkei, a weakening on the stronger the weak yen, and the Nikkei also rolling over this month. It's been certainly a down month for Nikkei, and a trend that doesn't look like any break in any time. Moved lower, and the 20 is about to cross the 50 here. And next support really for the Nikkei is that 200-day there at 58,000. We're currently trading at 63,200, but we need to get back over 65,600 to move that higher to the upside. But it's been under the 20-day since most of July, 7th of July first. Well, in fact, we reached it before then, didn't we? Right at the beginning of July. So it's been a weak month for the Nikkei as the yen weakened as well. So the rally in stocks very much over in Japan. The end of June took us to our 73,600 all-time high. So that moving lower. And that leaves us with gold, my friends. I'm going to wrap this up now. It's 4 o'clock on my word. So again, capped at, I've been saying this for days, haven't I? Capped at 4,100 on the daily basis. The trend remains to the downside. The killer yields in the US is literally doing that for gold players. Let's move that down so we get a better view for you. It's not wanting to do that for some reason. But just sideways since the end of June, so all of July, just going sideways, bias to the downside. Doesn't want to break under 4,000, so buys at 4,000, resistance at 4,100 this second half of July, 4,200 at the beginning of the month was the upside, but again, the 20 has provided resistance. 1 day over, the rest of the time down. 1 day over there on yesterday and back down again today. So capped at 4,100, a bit like Bitcoin capped at 65,000. So watch that going into the new month. Support at 4,000, 4,100, then 4,200, then the 50-day moving average at 4,200. Sorry, 4,200 where the 50-day will come. So that's the double resistance area. 4,100, which is where we were yesterday again. I think we're back at 4,050 today. So buys at 4,000, resistance at 4,100, key resistance at 4,200 as we go into August. The longer this goes sideways, the bigger the breakout, either down, giving up all of this big gain we've seen. And I say, as you can see here, we've given back our 2026 gains, which were spectacular in that first month of the year, and even the second month of the year. We still rallied back up before the war started at the end of February. So gold weighed basically by stronger dollar and stronger yields until that mantra changes. Gold ain't going anywhere, I don't think. MACD would tell us otherwise. It's sort of ticking up, but it's not. It's moving up gently. So maybe there is a lot of accumulation going on here. But again, 50-day is the key break. It's now under 4,200, so might become more of an issue as we go into August. So gold sideways, key levels, big round numbers, 4,000, 4,100 and 4,200. So that's the wrap for the week and the month. I hope you've had a good one. I hope your pips and your points have been positive. I've had a goodish month. It was a bit sticky in the middle of the month, to be honest, on the short-term trade. My end-of-day trading has been doing very well. So take care, be good, have a great weekend, stay safe, and keep your loved ones close, my friends. I'll see you on Monday. All the very best. Take care. It's August. And non-farm payroll next week. We've got, actually, let's just... let me just finish with the calendar for next week. Say it's more tech earnings. We've got SpaceX. We've got Palantir, if you're a Palantir fan. Can't say I am, but anyway, Palantir reporting earnings, Disney reporting earnings, all of the major pharmaceutical companies, so Merck, Pfizer, Novo Nordisk, all reporting earnings next week. Sorry, let's do the calendar for next week. It's the 2nd to the 8th. Apply settings. There we are. So, and it's first week of the month. So we've got PMIs. We've got, obviously, it's jobs week as well. Non-farm payroll on Friday. 88,000 is expected from 56,000 last month. Unemployment rate remaining unchanged. That's Canadian unemployment. Unemployment remains at 4.2%. In the US, earnings more or less flat as well. Jolts as well. We got ADP on the Wednesday. I'll be live for those, and the key ISM manufacturing and services numbers as well next week. See if the US continues to lead the world as far as the Purchasing Managers Index is concerned. So we've got Central Bank Week out of the way. We've got the end of the month out of the way. Now we've got the new month. We've got the doldrums of August starting to bite. Many desks very sparsely manned as the holidays continue in full swing. So take care. I'll see you on Monday. I'm not quite sure what we're doing on Monday. Oh, wait, that's for the manufacturing PMI. So, but same time on Monday. Tuesday for the jolts, same time, 3 o'clock my time, 2 o'clock GMT. Wednesday, same time, ISM services PMI. So same time, Monday, Tuesday, Wednesday. Thursday, I'm out Thursday, so it'll be later on after the close in the UK. Probably a late live trading session for the US session on Thursday. And Friday, obviously, we'll be around for non-farm payrolls, 1:30 London time, 12:30 GMT for the non-farm payroll data. So join me if you can. If you can't, watch the recordings later on. I hope these all make sense.